It's only a question of time until the Fed caves and not only starts cutting rates, but goes back to quantitative easing. As I said last week, just buy. Do not wait. Do not get cute. Do not hope for a pullback. The pullbacks will be short and swift, and the chances are you'll miss them. If there is any doubt, we just got a re-escalation of the trade war that was just de-escalated, right? Trump agreed to lower the tariffs that he imposed on Chinese goods coming into America, right? Because that was 145%, right? So we dropped those down to 30%, right? And that was a relief, and we got a rally in the market. Gold sold off on that, right? Well, now, early this morning, out of the blue, Trump puts out on Truth Social that, the trade talks aren't going anywhere with Europe. I mean, I thought everybody was lining up to kiss his ass. Now, all of a sudden, we're not getting any progress. And so Trump said, I'm going to propose 50% tariffs on Europe. Now, of course, he doesn't mean on Europe. He means on Americans who want to buy European products, but he never frames it that way. But he said he's going to propose 50%. I mean, propose it to who? I thought he's the one that decides. I mean, is he going to propose it to them? How do you propose 50% to the Europeans? It doesn't make any sense. So I don't know what the language meant by he's going to propose it. He's going to propose it to himself. He's going to propose it to Scott Bessent. Hey, Scott, why don't you negotiate from this perspective? Now, I don't know. Maybe Trump is just trying to manipulate the markets, because the minute he put that post, stocks tanked, crypto tanked, right? All the risk assets went down. Gold immediately went up. Gold was already up before that announcement. Gold was up about $40, and then it was up about 60. I think it closed up closer to $70 on the day, but it was already up 40 even before Trump escalated the trade war with Europe. But he's really not warring against Europe. He's warring against Americans, because all of his cannons are pointed at American citizens, because it's Americans who pay the tariffs. I mean, it's ridiculous that Trump is getting mad at companies like Walmart for raising prices because he raised their costs. I mean, how could they not raise prices? I mean, they have to. They have to pass on the tariffs. That's what tariffs are. They're an indirect tax. They're a tax that the consumer pays indirectly when they buy products that are subject to the tariff, just like a sales tax. I mean, don't companies pass on the sales tax? Of course they do. They add it on right on the top. The companies don't eat the sales tax, so why should they eat the tariffs? It's the same thing. And again, of course, the purpose of a tariff, of a protective tariff, is to reduce the consumption of imports. And the goal is that consumers will buy domestic products instead. Well, what is the mechanism that causes that behavioral change? It's prices. Tariffs make the price of imports go up. And because imports are more expensive, Americans buy fewer imports. They look for domestic alternatives to avoid the tariff. So in order for the tariff to work, the retailer has to raise the prices. If the retailer doesn't raise the prices, then the consumer's not going to stop buying. And so the trade deficits are going to go down. So, I mean, Donald Trump talks about how much he loves the word tariff, right? Oh, tariff is the most beautiful word in the dictionary. It's my favorite word. Maybe because he doesn't even understand it. He doesn't know what tariffs are. He doesn't know what they do. He doesn't know who pays them, right? He thinks it's all external revenue. He thinks it's a way that, America can go and pick the pockets of the rest of the world to pay for our government spending. Well, that's not the way it works. But this was a big wake-up call this week to the markets that there is no fiscal discipline in the U.S. Inflation is going to run out of control. It's only a question of time until the Fed caves and not only starts cutting rates, but goes back to quantitative easing. Because I believe if the Fed cuts rates and doesn't go back to QE, the long end is going higher. So instead of a 4.5% 10-year, we have a 5.5% or 6% 10-year. And instead of a 5% 30-year, we have a 6%, 6.5%, 7%. These rates are going much higher. And that's going to weigh heavily on the economy. It's going to make the debt that the big, beautiful bill is already increasing that much bigger, because now all that existing debt and all that new debt has to be financed at an even higher interest rate. Remember, trillions and trillions come due every year of that debt. And most of that debt that was taken on, 3 years ago, 5 years ago, 7 years ago, 10 years ago, even then it was borrowed at much lower rates than what exists today. So the costs of servicing the debt keep going up. And if the Fed cut short-term rates and the long-term rates rise, that's going to force the government to keep refinancing at the short end of the curve. And that's going to increasingly shorten the average duration of that national debt. The shorter the duration of the national debt, the bigger the potential problem. Because eventually, when the Fed is really forced to try to put the inflation genie back in the bottle, the alternative being hyperinflation, now the Fed has to go medieval on short-term rates. Well, the government is completely vulnerable because now all that debt starts to mature. When Paul Volcker had 20% interest rates in 1980, 81, yes, it was bad for the new debt, but the existing debt wasn't affected because the national debt was all long-term debt. So it didn't mature into that environment. But when we've got a national debt financed with treasury bills, and more of that debt is going to be in treasury bills because of the yield curve steepening, we are in for a world of hurt when the Fed finally has to do something about inflation instead of just pretending to do something, which is all it's done over the past several years. Because for all the talk about tight money, we never got tight money. Gold told you that the Fed was too loose. The whole time the Fed was tightening, gold was rising. If the Fed was really tight, gold would go down, right? But that never happened. If the Fed was tight, credit would have contracted. Household debt would have come down. Instead, it blew to record highs. If people are borrowing money in record amounts, what does that tell you about credit? It's too easy. Look at government debt. The government deficits exploded. That doesn't happen in a tight money environment. Tight money is tight credit. Inflation is an expansion of the money supply and credit because credit is like money. You don't need money to buy stuff if you have credit. And so as people have access to credit, they can bid up prices. So what the Fed has to do to fight inflation is not only shrink the money supply, which is now growing, it's not shrinking, but they have to shrink credit. And even though money supply contracted a bit before it started to re-expand, credit never contracted. Credit expanded the entire time the Fed was pretending to tighten monetary policy. So the whole inflation fight was a lie. The Fed basically surrendered before the fight even started, and inflation won. And now it's going to do a victory dance. But this is what is prompting the exodus from the dollar. And I think the dollar is looking very weak going into next week. It could drop even more.